Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name is Vishal Teckchandani, and today we're going to talk about 5 stocks on a tear. Joining me is Ben Clark from TMS Capital and Matt Haupt from Wilson Asset Management. Matt, I'll start with you. Aristocrat Leisure, buy, hold, sell.
Buy. The reason why I like it, the land-based business going fantastic, but the digital business, which everyone was a skeptic of, is flying. So for me, this is a buy.
Okay. Short and sweet. What do you reckon? 400% share price increase over the last 5 years. The chairman did reiterate guidance for growth in fiscal 2020. Buy, hold, sell.
Yeah, I've got a buy as well. It's our largest holding. I think that the management's done a superb job, not only continuing to really run their existing asset base hard, but to pivot into a much bigger growth and much bigger market potential, and they've executed beautifully. Stock doesn't look overly expensive.
Okay. Staying with you, Ben. Challenger Financial Group. Share price jumped after its results. Is it a re-rate or a sugar hit? Buy, hold, sell.
I think it's a hold, but it's a buy on any more weakness. I think the CEO's done a really impressive job repositioning this business in quite a short period of time after a pretty chaotic year last year, mainly driven by the Royal Commission. So much better than expected numbers. Growth again, growth outlook. If you can get it a bit cheaper, it'd be a buy, but it's a hold for now.
Okay. Matt, are you going to challenge that view?
I'm going to pretty much agree with that view. I'm going to say buy in the 8s. It's currently in the 9s, but once the advisor channel gets fixed and they start getting flows through the retail network again, this looks like incredibly good value. So even with the low interest rates at the moment, people are wanting some certainty around income, and for me, this is a buy in the 8s.
Okay, let's move on to healthcare darling Resmed, maker of sleep apnea products. Buy, hold, sell.
For us, it's a sell. Great thematic. Everything's very good about the company, management, where they're at. Valuation for us really makes this incredibly tough to buy, and that's why I'll be putting on a sell.
Ben, what are your thoughts for Resmed?
Yeah, I'll be a hold. I think this company is sort of slowly morphing into almost a technology business through some really good acquisitions that it's made. I think the sleep apnea market's still got a very long runway of growth for them. It does look fairly expensive, but this is a stock for many years now that has held that PE multiple, and I think the earnings are going to keep pushing higher, so I see the share price moving higher.
Okay, next on the list, Domino's Pizza, back to 3-year highs after serving up 10% growth in EBITDA. Buy, hold, sell.
Yeah, I'm a sell. I'm still a skeptic. I just think the competition that is coming into this space and the technology competition that's coming in, it's going to be extremely hard for them. They've done a great job, you've got to say. And I'm a skeptic on the franchise model as well. And the share price to me is, sort of pricing in quite a bit of growth ahead, which I find challenging to see.
Okay, lots of skepticism from Ben. Is there optimism from you, Matt?
No, I'm going to say sell too. So again, valuation, like the business, yeah, they've done fantastically, but I just think there's some cost of goods flowing through now, like some inflation domestically. I've been wrong on this stock for a long time, so I'm probably not the best person to listen to on this one, but for me, it's too expensive and there's too many headwinds coming with competition and cost of goods as well. So for me, it's a sell.
Okay. Last on the list, Goodman Group. Interesting thing about Goodman is that it doesn't yield much more than a TD, but investors are in love with it. Are you in love with it, Matt? Buy, hold, sell.
I'm going hold. It's a big position in our portfolio. So for us, the thematic around Goodman and the opportunity to deploy capital into good returning vehicles still exists. And they've pretty well underwritten their results for the next couple of years of around that 10% growth. So for us, if you're looking in the REIT space, if you want to classify as a REIT, it's the only one with decent growth, apart from the other ones which have done acquisitions like Charter Hall. But for us, Goodman's a standout.
Okay. Ben, what's your call on Goodman?
Yeah, I'll be a hold as well. I mean, I think they own the right assets. They've got the expertise in the area of property that everyone's looking to get into and partner up with. But it is expensive. And, on a sell-off, I reckon this will be a good buy. And management have done a superb job as well. So it's got a lot of the stuff that we really look for. But maybe just at the moment, it's just a bit too expensive a hold.
Okay. While some of these stocks are delivering some pretty sweet returns, the experts reckon the risk of a sugar crash is just a bit too high.